All right. All right, guys. All right. How's everyone doing? This is Hala Pablo. Thank you for tuning in. Let's do a real quick Bitcoin update. I'm not kidding. This is going to be fast because I got to do stuff. But I wanted to something caught my eye, and I just wanted to let you all know. So this is like 2021, 2025. We're still indulging ourselves in the fractal range analysis, right? We still have these fractal ranges from roughly 4 years ago. I know it's not exactly 4 years. That's not the point. Fractal ranges, you can mine them anywhere between 3 to 5 years, somewhere in there. 4 years is like the average. It's kind of like that sweet spot. But just like we don't draw support and resistance lines exactly at the end of the wick or at the body of the candle, there's a big debate about that amongst traders. That's like overlooking the forest for searching for a tree. Basically, that's not the point, and it's not the point that it's exactly 4 years or it's not exactly 4 years. It's in that sweet spot window. So these are roughly 4 years apart, and their fractal range. They're basically sister ranges, as you can see. And every 4 years, algorithmically, price action seems to repeat itself. Don't ask me why or how. I don't know. It's one of those wonders of the universe. It's like the Fibonacci, the golden Fibonacci ratio, the 618. You can find it not only in price action, but you can find it in the human body. You can find it in DNA. You can find it in you know uh, astrophysics, planetary laws, and all of that's everything in biology and also in price action, things that are tangible and intangible. You see the Fibonacci ratios, right? They ring true. Why? I don't know. I don't know. That's how God designed this universe. And the same thing with price action. I don't know why every 4 years, more or less, we see a replication playing out in the price action. It surprises me even more. What's even more of a wonder to me is why so few traders understand it or have looked into it seriously. It's not, like, now I have to emphasize, it's not cookie cutter. It's not 100% precise, obviously, because, well, I wouldn't have a YouTube channel. I wouldn't have a Discord. I'd be, well, I probably still would because I wouldn't know what to do with myself. Money's not a big thing for me, but like, so many of us would be gajillionaires, millionaires, billionaires, right? If this played out like a science every time. But notwithstanding that, the replication of the general trajectory of the waves can be tracked. Like, for example, we see, like, right here where we are in this regression trend. This is roughly 4 years apart. And I mean, look at the waves. It's just uncanny, right? And this is just one area. This is just one distribution playing out atop. Now, if you anchor the VWAP to certain areas, the same area, like the all-time high in both, you have it playing out in the same general area. We see this rejection here after this LPSY, and we had that markdown, kind of like the same thing here. Now, where it differs is the extent of the waves, and I can't emphasize this enough. And this is why I'm thinking, like, even though we see this kind of see where we have this double attempt at this resistance at this micro trend. Well, this would actually be the macro trend resistance of this regression trend. We have like a double. We had the same thing happen 4 years ago, but whereas these attempts, like this whole first section of this redistribution, stayed beneath channel midpoint, as you see here. This year we're seeing these swaths, these wide swaths, these attempts going all the way up, almost just bouncing off the ice barrier, all the way up from beneath. Now this would be the micro trend support line, beneath, well beneath, into the throwover area, all the way up to resistance in this inverted ABC, almost, this A, B, and C. We saw it only come up to channel midpoint for the last cycle. And then the same for the second one here. This one all the way up. It blew right through channel midpoint, whereas these stayed beneath the governance of the channel of the regression trend midpoint. And it's only now where actually this one went up and had a double attempt at the resistance, which we're seeing here as well. This double attempt. So because of these two attempts that went all the way up to the ice, it's possible to see this as well. This second attempt, perhaps, do like a, a liquidity run all the way up to the ice would be in the 90s, 92, 93. That wouldn't surprise me because, again, this is not, although so much of it is similar and the length of the waves, for the most part, the length is congruent. You can count the waves, you can measure the waves almost, and they correspond to the Fibonacci's and to the percentages of extensions and retracements. Sometimes you get some rogue activity going on like this coming down like this. We didn't have anything like that. This whole redistribution range was pretty linear, whereas this is bouncing all over the place. And then this one bounced, and this one became linear more or less. So they're like alternating. So really, it's not predictable. The little nuances, the little idiosyncrasies of the waves are not 100% predictable. Nor should we try to bank off that. That's where you can get in trouble. But where you stay safe is when you get the big general trajectory picture of it. And so we need to make allowances for a possible liquidity run all the way up until like to the 90s, 92, 93. We may even wick above the ice. It just depends. But just like if we play if we play to see how this worked out, see came back down. It did this this double top here on the micro, came back down into the range, into the regression trend. And we know from, retrospect, because we already know what happened, this thing just distributed wholesale, just all the way down to 16,000, right? So we're certainly hoping that that's not the case this year, although, like I said, from going off the macro, it is possible. Let's see. How can we go back to that? This is the macro. Remember these two charts? The subcycle A and B from 2021 and the subcycle A and B from 2025, where we are right now. This is where we are, what we were just looking at on the micro. This was 600%. This whole cycle from the womb to the tomb was 600%. Guess what, guys? The same for this. From 16,000 to 109,000 is roughly 580, 590%. Traders have no problem when we're going up, when it's bullish, right? People expect this thing to just keep going, just keep pumping. Well, that's not how it works. That's not the game. You need to understand the rules of the game. And the rules of the game is the higher you go, the deeper you fall. And the deeper you fall, the higher you go. It's like that Beatles song, right? And so it's kind of like that with the price action. The good news is that we have algorithms, we have fractals that, for the most part, are very reliable, and we can get a general idea of what the price action may do. And so we see, like here, where it failed to come above the ice, we retraced it back into this macro support. Now, this is the macro support that we see on both, and here we had this. We didn't know at the time that this was going to be a redistribution, but we could certainly see something like this if we once we bounce off. Say we bounce off this. See, this is that upper ice that we were just looking at on the micro, the 93, 92, 93. If it does a liquidity run, but then I expect us to be rebuffed the same as we were here, and come back down into this macro trend support and then consolidate. And then once we fall and consolidate, I think we're going to consolidate somewhere here like we did. This happened in the 40s and the 30s, whereas for us it could be in the lower 70s, upper 60s. Incidentally, this is the area where there was an altcoin season. That's usually when Bitcoin, after it retraces from an all-time high, and I'm not talking about redistributing. See, Bitcoin is still redistributing, and that's why we're not seeing the alts bounce at all. That's why we're not seeing any activity in the alts, because Bitcoin is still very, very aggressive. Think of it as Bitcoin is still fighting to stay up above the ice. It hasn't consigned to its fate yet. But once it does, if it gets rejected again, and I don't think there's that many more rejections according to this algorithm, we may have one more big one, and then we're gonna fall. We're gonna do another. We're gonna have another redistribution, another macro markdown, and this could take it down to the, for lack of a better term, its grave. But of course, Bitcoin's like Lazarus; it's gonna get resurrected. It's just a matter of how long it's going to be in the grave. The point is, once it's in the tomb, once it's consolidating, wherever that may be, then we can expect the dominance to at last fall because investors, strong hands, the muscle is no longer actively trying to pump life into Bitcoin. There's now an absorption campaign going on that is very slow, very clandestine, very surreptitious, and so it takes a while to reconsolidate. And then whether it goes up or down remains to be seen. Like here, it got rejected off both these ice barriers. We'd have to see. Eventually, these two ice lines are gonna crisscross, kind of like this, and then the interaction with Bitcoin's price at that point, wherever that focal point comes, is going to be like the fulcrum of what happens if we go ahead and maybe do another inverted head and shoulders. This would be an inverted head and shoulders, kind of like we saw here. It proved to be a whole other system put up, or it's going to bite the bullet and really go down into the depths of the earth, so to speak. And so we don't know. Of course, we know that this went 70% down. That could take us down into the 30s to the 40s. I don't know. I don't have a crystal ball, and I don't purport to know. So this is just, this is just technical analysis, guys. It's good to look at this stuff and to kind of look at all the options. See. I'm a bear when I need to be a bear, and I'm a bull when I need to be the bull. I let the price action determine what I'm going to do. And if you're a smart trader, you'll do the same thing. And right now, I'm looking at the governance of these two ice barriers in relation to this regression trend right now. And so I'm expecting possibly another liquidity run up here and then down, or it's going to be down from here. Now we could pull like a cursory kind of VSA and look at it, and we see demand decreasing. This one was a pretty high demand spike, but it got immediately engulfed by this markdown. So like we're seeing demand register once we get up around the resistance line, but immediately it's engulfed by just insufferable bear power. Selling pressure is so high. Look at it. We have predominance of supply up around the resistance line of this regression trend. And here we're seeing more demand now in this kind of like this rising wedge. I think you can call this a rising wedge, wouldn't you? I mean, that would fall in line with the algorithm. And so we know that with a lot of the times, especially with Bitcoin, it's so darn aggressive that even it'll buck the trend with falling wedges. So this is expecting to go down, but usually with Bitcoin, not before a liquidity run, to fake out, to do a short squeeze, because everyone's thinking this is going to retrace, this is going to pull back, this is going to dump. So they set their orders, and by pumping back up to the ice, it just wipes out all those stop losses. And so Bitcoin's ruthless, it's brutal, it does that, and so we saw that here. This wasn't expected to pump all the way back up to the ice. This was expected perhaps to just people put their stops around maybe channel midpoint. This by pumping all the way up and rating the liquidity up here, it's just, you don't realize how many people get liquidated. We read about it the next day, don't we? We don't get liquidated though, right? In this group, we stay safe in this group. We've been safe since here. We've been safe since January. And then everyone's calling for 120, 150, $200,000 Bitcoin, and we're like, nope. It's distributing, and we all stayed safe. So why? Because I'm not a wizard. I don't know anything. I'm not God. I don't have a crystal ball. We go off the algorithm, and then we look at the news. And if the news, remember, the news is really, really bullish around this area here, and that was really a big thing. First, number one, I had the algorithm, which was saying distribution, diamond. We had this rising We had this ending diagonal, this broadening wedge with the 5 at this ending Elliott, and then we saw here that it couldn't get back up into the structure. That's bearish. And then we had the mitigation of the all-time high. That's bearish. And that came on very, very high supply. That's bearish. And then we had the series of redistributions. We could start drawing the regression trend down, bearish. And then you go and you look at the news, you read the news, you see, you get on, in this case, is something really good to do, is you get on TradingView and go into the chat room, and if most of the people in there are bullish, it's pretty much it's a contrary indicator, because a lot of those guys are noobs and they're going off their emotions, and so they believe everything that they read in the news. I hope you're not one of them. If you are, you need to subscribe to this channel. I'll set you straight. Learn how to trade the right way, which incidentally, you could do that if you join our Discord. I keep it extremely affordable. The least you could do is subscribe to this channel, and I'll continue to endeavor to keep you safe. And check out, if you really decide to get serious with trading and you want to just learn the right way, and the indicators aren't working for you, the RSIs and the oscillators and the exponential moving averages and all that good, the vortex indicators and all of them, Ichimoku clouds, I don't care what you got. If it's not working, see, you could win some trades with them, but like the whole thing is consistency. If you're not staying safe consistently, then something is wrong. Something's wrong. You need to tweak your trading system, and usually it takes an epiphany for someone to realize that, okay, this stuff's not working. I need to erase the chalkboard, and I need to start from the grassroots. And the grassroots is price action, volume, trend, and anything indexed to the volume and price action, which is, of course, the volume weighted average price, or the VWAP. Those are really the only things you need to begin with. Learn the Wyckoff cycles, and then the really good stuff. I could show you the really good stuff about finding these fractals, finding these crystals. How do you think I found this? This is fractal range analysis. It's not wizardry. It's not nothing magical. It's just like going back to the beginning of this video. Every 4 years, between 3 to 5 years, we can find the crystallization. It's almost like the DNA of the current play out of whatever schematic we're in, whatever trading range, if it's an accumulation or distribution or redistribution or reaccumulation. Chances are there is a fractal, if you go back between 3 to 5 years, that is more or less congruent. It's a replication. It's almost like a crystal. It's looking into a crystal at what's going on right now, and you can base your TA off that using the news, of course, as a reverse indicator, as a contrary indicator, knowing that there's a predatory presence out there known as the market maker or the composite operator or the informed interest that uses the news. They obey, they govern, they are the ones who move the buyers and the sellers through the manipulation or the exploitation of their emotions to fulfill the waves within the algorithm. So, and all they're doing is they're translocating liquidity, your liquidity, dumb money to smart money, weak hands to strong hands. That's it. And whether that means taking Bitcoin up to the top, up to the moon, they'll do it. Or if it's taking it down to the dregs, they're going to do that too. Whatever necessitates, whatever effectuates the translocation of that liquidity, they're going to do it within the construct, the governing construct of the macro algorithmic structure. And so that's how that works. And they repeat it over and over and over and over again in cycles. And that's what comprises the Wyckoff cycles, which is made up. If you break it down even more, you get DNA. You know how like atoms and molecules, if you break it down even more, it's fractal. It's broken down into fractals, and the fractals of fractals, and the fractals of fractals of fractals, and so on and so on. It goes, and the building blocks of the fractals are Elliott waves, the 1 through 5, and the ABC correction. So if you'd like to learn more of that, check out our Discord trading group. I keep it ridiculously affordable for the knowledge that you can glean, but only if you're serious. If you're just kind of like a hobbyist and you're kind of like interested Bitcoin or Zcash or Cardano, and just like to see where it all goes. And by all means, you can glean so much just by subscribing to this channel. And with that, guys, I am out of here. And I will talk to you guys later. God bless you. I hope you had a wonderful weekend, a wonderful Sunday, and I look forward to talking to everyone in my group. I'm going to have more time. I was extremely busy last week, but this week I should have more time to answer questions and indulge in some really cool conversations about price action and the fractal range analysis charts that I've been uploading to the Patreon. And we could really get more in depth into that. And I can't wait to do it this week. Why don't you join us? It'll be great to have you. All right, this isn't financial advice, but you already knew that. Again, God bless you. Be safe. Talk to you later. Adios, guys. Bye-bye.